When I look at what we've been focusing on over the years, we've mentioned Operation Pride is well and truly embedded. And I know Michael will have some comments about that. And I think the important thing is to mention that the turnaround is actually happening. And the results of that turnaround are actually reflected in these results. What we are focused on now, going forward, is on what we announced in July last year, which is the focus on the capital optimization. The capital optimization is a complex process. It involves us discussing with a number of our financiers or a number of our stakeholders around how we can improve the debt profile of the company, i.e. reducing the overall debt of the business, and secondly, how we can improve the liquidity, which is the financing ability of the company to allow the company to grow.
One of the only, if the only publicly owned airline that is viable and profitable in Africa, if you look around it now. And I think that's really important to see, that we are not funded by the state, we're not state-owned, we are publicly owned, as you know, and we have gone through some really tough times, and we are coming out of those tough times. And I think it's important that all the initiatives that have been done by Kenya Airways over the last year are bearing fruit in terms of the operational performance. I'm sure you've had many comments and heard all the many comments about late arrivals, or late departures, no departures at all. I think we've done a lot of work in that area, and I think and we are definitely seeing an improvement in our operations, just in the terms of the on-time performance. I mean, Vincent, I don't know what the figures are, but probably offhand that the figures are in the 85%, 87%,
correct,
85%, 90% of our flights are operating on time, which is really, really good. And this improves, it doesn't just improve the financial performance of the airline, but also from the morale, the staff morale, and people start to believe in us. And I think what's important going forward is to understand that, yes, we're coming, we're seeing some positive light at the end of the tunnel. We are showing some good results. We have some ways to go. We're not there yet. We probably have another 6, 9, 12 months before we really see ourselves coming out of this. And of course, lots of that is dependent on external factors which are not in our control. The turnaround has already begun, because I don't want to diminish what Mvuvi has already done. The turnaround has begun. It's to continue with it. And that's why, I think that we need an experienced airline executive. It would have been very easy to say, let's just hire another Kenyan, but I wanted to have that experience on hand. From the top team, I think what you will see is on the top team, I don't think you'll see any changes in the top team, maybe some additions in the top team to strengthen the top team. Vincent here is the head of the commercial. He's new to the airline, 6 months now.
6 months.
And you'll see others join, but it will mostly be strengthening the top team.
When I look at fuel is up and down today. I think what we've seen over the last year, the first half of the year, fuel prices were low, and that's why we saw the madness globally, because of the capacity market growing faster in capacity than passenger numbers and fuel prices. That combination led to a fairly lower yield environment, and it's impacting everybody. The price has been firming up over the last 6 months, but it's not yet reflected in pricing. I expect that fuel prices will stay probably right now, and that's just my view, it's not a KQ view, that I think we'll see it range bound in the early 50s for now, because there's ups and downs. I saw North America is releasing their reserves right now, so it will have an impact on prices.